and welcome to the MCS pre-scene analysis. Now, this is just an intro clip to introduce you to what the product range actually is and sort of, the contextual factors so that you can have the utmost confidence in the process for your exam success. So the first thing is that my name is Joseph and I am the MCS expert at Astranti. I write mocks for the MCS as well as offering, tutor responses to any MCS queries as well as F3 queries, and I also write portions of our study text in regards to the MCS and F3. So that is my sort of background. I've been, working with the MCS for around 2.5 years now. It's quite a few sittings so far. And I've had a lot of sort of knowledge around this kind of level for a number of years now before I took over as the MCS expert at Astranti. So you can find sort of sneak previews and video clips surrounding the MCS and exam success in the case study at my Facebook page, which is sort of shown at the bottom. If you search that, you will find, all kinds of clips on a weekly basis regarding the MCS, even when there isn't a pre-scene around yet. We look at some examiners' reports. Okay, so besides that, what actually is the pre-scene? Well, it's a video series first and foremost in this analysis. We go section by section, covering each page in as much detail as you'll ever be required to do. It's very speculation based, but ultimately we're using our P2 and E2 theory in sort of the page, like the wordy sections of the pre-scene to pull out all the relevant points, as well as, applying F2 to our numerical information in the financial section. So the key points, industry guidance and how that relates to the company, and also we apply the business models. This is done mostly in the strategic analysis, but there will be mention in each section when it's particularly relevant. We talk about extensively the likely exam issues based on applying all this theory as we go through. So there will be hints to you and sort of key focus points for you to pick up on as we go through. There's also, these sort of standout exam hints and tips that we do come across. Like there are some that we're speculating on, and there are others that are just huge indicators that I will 100% point out to you, sort of the given questions that will definitely turn up in one of the variants. And potentially that variant is yours. We then have the strategic analysis, which is a very focused business model to pre-scene sort of video and presentation. And we have the top 10 most likely issues, which follows up all this information with essentially the top 10 problems that are likely to come up in the exam, with the top 1 to 4 being almost a guarantee that they will be, definitely there. We have a pretty good success rate. I believe in the past 5 sittings, we have scored about 7.5 correct issues in the majority of the different variants. So with that in mind, you can have a lot of confidence in our sort of guesswork and speculation. And then there's the other ones near the top of that list, which are basically guaranteed to come up. So how is it going to work? We'll go section by section. We'll assume that there's no knowledge as I progress. So by that I mean you haven't pre-read the pre-scene. We'll be going through together as it was our first reading. If you've already read it, great. But I will assume that you have not read further on at any given point. The only thing I will assume is that you're relatively well versed in our F2, P2 and E2 modules, at least enough to be able to go back and revise a topic if, we mention that it's particularly relevant. What I suggest throughout this series is that you read a section and make notes just before, you watch it, or just after you watch the section. And this will mean that you can compare and contrast with my speculations and sort of inputs, and this will give you the biggest and most well-rounded exam prep you can possibly get. So very much go with that. It's very, very useful. And as we go through, of course, I'll have my review. At each video end, I will sort of sum up to the best of my ability what we've covered and why it's important. And of course, the last two products, we'll be going through a full strategic analysis and the top 10 issues, which are pretty straightforward as we discussed in the previous slide. So, without further ado, you will now cut to the current MCS pre-scene for you to get stuck in with. Hello there again, and it's that time again with another MCS. We're coming up to the November case study examination, and this time CIMA have got a company for us called Grapple, which appears to be a fizzy drink company. So just to kick things right off without too much delay, this video is going to cover predominantly the introduction section through to the industry background. Now, whilst it may seem quite introductory in nature, given that we're covering those first few pages, it's worth remembering that actually this is the foundation of the pre-scene material, which in itself is the foundation for the exam. So there's definitely loads of key information to go over as we go through. Following on from this, we'll have several videos going through each section, so check those out once you're finished with this one. But first, let's get straight into it. The first thing we're told is that our role is a finance manager for a company called the Grapple's Drinks Company, as we saw with the logo, and we're reporting to a finance director. So with this in mind, our first thinking is that we manage the finance function underneath an overarching boss that oversees these responsibilities, and we handle different tasks for them. So with this in mind, we're going to have a number of financial considerations. Now, it's worth pointing out at this point that this isn't always the role we're given. Sometimes we are the manager of a different function, such as production or performance, that kind of thing, and then we dabble in other areas. But as we go through, we'll see that we're actually the finance manager, and then we dabble in to other competencies across the company. So that's point number one. And it's worth mentioning on top of that, now that we are at the management level, the examiner gives us that hint. And it's worth mentioning that now we're at the MCS level, that we're actually going to be doing a bit more than focusing on operations. We're actually going to be monitoring certain performance measures and characteristics of the company, and then recommending changes, solutions, that kind of thing to the finance director, David Guy. So this is the sort of stereotypical, comes with every single MCS, that hey, hold on, we are at the management level now. Focus on the broader scope of activities. We're not simply trying to fix one thing and make that operate efficiently rather. So our responsibilities are going to be management accounting, as you would expect. So this means that whilst we are a finance manager, we are also going to need to know a lot about our P2 and E2, something you might not stereotypically place on the plate of a finance manager. But as they mention, we're liaising with various colleagues in various other functional areas. So essentially this is saying F2 is going to be the bread and butter perhaps of our thinking. So when we get to the financials, we'll go in depth there. But also that we're going to be looking at a variety of topics, which is where P2 and E2 will come in. Say, for example, we're helping human resources motivate their staff. We can think about various E2 theories in that regards if we come across any. And we'll get to that, if we do come across those kind of things. Importantly, however, at the end, we see that David concentrates on the financial reporting and special projects, but delegates some responsibility to you. So with this in mind, I would err towards perhaps the F2 parts we're going to be seeing more often than not are actually not going to relate to financial statements as heavily, now that's a key part, as heavily as you might assume. This suggests to me, just from an outsider perspective, that we can expect more questions about maybe equity finance, debt finance, the sort of broader finance aspects rather than the reporting of those finances. So with that in mind, let's not be too pigeonholed on our financial statements. Let's have a broad focus. So, on to the next section, which is on Grapple's history, a rather long page about everything to do with the company, but it's so important because we need to know about the company to understand where it's going, what its vision is, the mission statement, that kind of thing, and understand what our role is going to encompass, because we need to know the context before we go ahead. So it's founded by a person called Dudley Grapple. Conveniently, his name is both grape and apple smushed together. Ha ha ha. But importantly, the first thing we see is that they're in a different nation, as is normal for an MCS, and their currency is the Z dollar. So the first thing we think of here is they have their own currency, how that affects exports, the potential risk of exchange rates. So suddenly, just by putting that small innocuous sentence, we have a variety of material that could come up in the exam. It's quite a simple thing to say the currency is this made-up currency, but actually it gives us the hint that we might need to think about exchange rate risk, translation, transaction, and also that how that might affect imports and exports, pestle analysis regarding those political factors that might then affect exchange rates, loads and loads of things, economic unions, all of this comes in. So let's make a note here that actually this small thing gives us a lot to think about. So picking up from here, we've got our mention of pestle, exchange rate risks, the export-import aspects of being a different nation to what we might typically think of, the UK, given that CIMA are based in the UK, or maybe the US, for example. So Dudley had some experience working as a sales manager for a drinks company, so it's quite appropriate that he made this company, and to some extent it will give us a hint that perhaps he already had quite a good knowledge of the industry, and therefore the company was founded on very good ideas. So it's not really something we can tangibly attribute to a particular module, but it's worth mentioning that perhaps it's managed very well in a very loose guesstimation from that sentence. So as we scroll down here, we can see that Dudley incorporated Grapple and invested his redundancy money. Now, it's quite a minor point, but my thinking here is that there is some reluctance for maybe a listing. We don't know as of yet whether the company is listed on the stock exchange, but perhaps they want to keep it in the family given that sort of history and nostalgia of Dudley, the original owner, putting his redundancy money into the business. So again, nothing I can particularly attribute, unfortunately, to a module, but there's going to be loads in here. But just something to keep you thinking as we go through. So he got a bank loan. Okay, there was some debt finance. So I guess a little bit of experience with debt finance. But importantly, as we scan through here, there's a lot of waffle, of course, because it is an introductory page. That Grapple have introduced a number of new products sold in recyclable glass bottles, and there's a variety of different types, mixes, carbonated mixes and juices. So let's break this down. Recyclable glass bottles. If we remember that a key factor in the industry, from the industry pack, is this branding element and being eco-friendly, whether that be with the sugar content for the populace, for the the customers drinking the drinks, or whether that means the packaging and how disposable it is, that kind of thing. So recyclable glass bottles in the last 20 years means that Grapple have made that effort to be ethically and environmentally, in good grounding, which then helps the branding. So we can already see that Grapple has got brand recognition in mind with their policies, and that's going to be a very key factor throughout this pre-scene, I imagine, given what we learned in the industry pack. So, following on from this, we see that revenues have increased as the business continued to gain market share based on a reputation of quality and value for money compared to competitors. So again, a number of things to pick out. On top of the environmental branding elements we can pick out from the sentence, we can also see that they are not, afraid of building new products, or creating new products rather, and putting them to market. They have, a number of products we can see in 3 different categories. So given that we also learned from the industry pack that water is gaining market share as a sort of sold retail drink, we can then assume that Grapple would be open to, and perhaps even be considering right now, that they could bring out a water product. So, Grapple Water, something like that. And with this in mind, again, we can see that there's a potential new project there, because we know they're not reluctant to new products, and also that we know the market is looking towards having a water product. We see that in the Dr. Pepper Snapple group, amongst many, Ribena, all these huge companies we know have a water brand, even companies such as Coca-Cola and PepsiCo. They also have water brands because they're actually very, very popular, whether you are a particularly, common buyer of retail water or just use the tap. But with this in mind, again, Grapple are open to new projects. This could be a new project given our previous information from the industry pack. So on top of this potential water project, where they're looking for a new product, we can see that Grapple have increased revenues, and the way that they've done that is through a reputation of quality and value for money compared to competitors. Now, this is quite an important point because this will likely determine the type of strategy that Grapple want to undertake as they compete for an increasing market share. So for example, we can't necessarily expect them to, say for example, the water project we might be considering as Grapple, you wouldn't see them buying into or creating a brand of water that's aimed at, a very niche market at the top, such as like Smart Water. I don't know if you've seen that. In the UK, there is something called Smart Water. It's far more pricier than the most popular water brands, such as Evian and stuff like that you might see in your stores. And it's, marketed at, people who want to spend extra money on water for a few extra vitamins and different minerals and stuff, versus the sort of standardized water bottle you get from the likes of Evian. So with this in mind, they're going to be looking for a really high quality product, but one that's also value for money. So it's going to be a very broadly focused product if they do it. So they're looking for wide appeal in terms of quality and accessibility. It's a key factor because the last MCS company was all about the high-end premium. This one, we need to make note, is not necessarily about the premium, but more so about quality for a price that you can justify. It's a key point when we're talking about new products, and new products rather. And this brings us to the point that it's a very P2-centric strategic style of thinking. So we've got to think about our pricing strategy for a new product, and also the project management. How low do we need to keep costs, and also how high do we need to value quality control? So those two things are factored into what their reputation is all about, what their brand is all about, and as we know, branding is super important. So this is our little bit of P2 that we're getting from this paragraph. And also that we can see that costs have been kept under control. So once again, this links into our P2, our budgeting, ensuring that we've got everything under control. This will likely be a feedback control system, but we will have to see further confirmation as we move through the MCS. So once we get confirmation, or perhaps confirmation of feed forward, which is unlikely because feed forward is super rare, but once that's happened, I'll make a note of it. But just to keep it in mind, this likely is a feedback control system where they check the quality of their products and their materials and their suppliers, that kind of thing, on a regular basis. Oh, and that did not take long. I failed to read the next sentence immediately. The purchasing team review the price of raw materials every quarter to make sure that Grapple is getting good value from its suppliers. And I suspect there is a quality test too for those materials or supplies. So with this in mind, we already have that confirmation really that they are doing a feedback control system. This is where we can link in our P2 and E2 a little bit knowledge into this kind of process that they undertake. In fact, I would say that this page, being the history of Grapple, is perhaps not quite accurate, but that's besides the point. And we see afterwards that the production process is closely monitored and wastage kept to a minimum. So again, P2, project management, ensuring our budgeting is correct, there's no wastage, make sure that we've got our accounting for different costs to be precise, ensuring that everything is tip-top to offer the best quality for a good price. So it links back to that brand, value for money, good quality, good price. And as we move down here, we can see that despite growth, the business has continued to be operated from a single site. Now, I don't know if it's just me, but I believe that's probably the biggest hint an examiner can give that there is room to grow in terms of acquiring new non-current assets such as a new factory or plant or headquarters, that kind of thing. So new buildings, factories, that kind of thing, we have the potential for that to be a new project, a new investment for the company. Because whilst it's a very nice thing, a positive thing that they have grown really well, it's a little bit strange to be on a single site still, given that I assume this is quite a large company by now, given that they've got so many products and that kind of thing. So a single site is very rare, and to me that is very much an examiner dropping a huge hint. New project is acquiring a factory, new headquarters, perhaps even acquiring a different rival business to expand the number of sites and products and just grow the company inorganically and ensuring that they're not just limited to this one site. So as we move down further, Dudley's legacy is that Grapple has always had a good reputation for how it looks after employees. So again, this is all about branding. So again, we're looking at our E2 and P2, very important theories surrounding staff motivation, the learning curve theory in relation to keeping them happy, and therefore if they're happy, they'll be more motivated and their actual efficiency will go along the curve of the learning curve to actually increase in productivity, provided that they are motivated. So we can think about E2 learning curve here, because they are focused on ensuring their employees are looked after well, which in turn helps their branding, because it's a CSR activity to be super open to increasing your staff's well-being. So just a little bit of detail on this sort of good reputation for employee well-being. The remuneration packages, so the wages are above average, which is good for attracting high quality staff, which may be necessary to ensure that quality control is really high standard, to make sure all the processes, that's not a word, as we go through are going to be efficient and done correctly with the right amount of ingredients. All that malarkey that increases the quality and efficiency of the product and therefore lowers the price by being super efficient, they're likely to be in place if they're offering better wages, because they'll get the best staff for that given role. And as we can see here, It's very important, so all legislation is adhered to rigorously. So if we get any mention of new health and safety legislation from the Zetland government in our unseen material from the exam, we know that Grapple almost indefinitely will adhere to it. So our recommendation is going to be always based on Grapple undertaking legislation and what the effects are for the company. It's very, very important to remember that. If the company is predisposed to adhering to those kind of legislations rigorously and probably quite quickly, we then will probably need to talk about the pros and cons of a given legislation to the company. Now, if you remember again from the industry pack, we will see that the high sugar content of fizzy drinks are very, very high on the sort of priority list of the wider community. They're very concerned about this high sugar content, and governments are looking at taxing high sugar products. So with this in mind, Grapple would likely do so. They will, adhere to it, pay the tax, and that brings about a very important question. If you get taxed more on a product, who absorbs the cost? Do you pass it on to the customer? Do you charge £1 9p for your can of soda? Or do you charge the retailer? Do you sort of, make your sell price to retailers higher in the event that they may then pass it on to the consumer? Or do you perhaps agree with your suppliers via negotiation? Yes, that's our E2. That we're going to be thinking about maybe making a deal surrounding maybe the company and the retailer share the tax. So maybe if there's 9p tax on £1 soda cans, then Grapple could absorb 5p of that cost and suppliers could absorb 4p of that cost, with the agreement that the price of the can of soda would actually not go up. So it'd still be £1 to the consumer, except Grapple would lose 5p profit and the retailer would lose 4p profit due to a 9p tax. Just as a quick example. You don't need to work that all out in your head. We'll definitely be going over that more, I imagine, if you didn't get it right there, but very important. If legislation makes taxes go up, who absorbs the cost? It's a very key negotiation, so E2 for Grapple. So in this instance, we've already got another hint about potential legislation sorry, getting a little bit tongue-tied. So say, for example, there's some green belt legislation. That's where a government dictates that a certain area cannot be built upon to maintain natural beauty. That would then force a company like Grapple, who are adhering to legislation carefully and only operate on a single site. If they were purchasing a new site, they would need to do so in a different area, because perhaps the surrounding areas are greenbelt areas, so they're preserved for natural beauty. This then implies that Grapple would need to buy a site that's detached from the main site rather, or perhaps would need to acquire a rival company to then get this new site. So with this in mind, it does give us a small inkling into the fact that Grapple will need to go further afield to expand. That could be internationally, it could be by acquiring a rival, it could just be by setting up a new site in a new city. But importantly, it cannot be, or we can at least hypothesize that legislation will mean that there is no possibility of Grapple to actually build a new site very close to their existing site. So quite an important thing to keep in mind based on potential information we get in the unseen or later in this pre-scene, which makes us think that this is going to be a big deal. So again, we get another mention that Grapple works closely with the local community to ensure that the production does not harm the natural environment. That links into branding in our CSR again over here. But as we move forward, we can see that Dudley sadly has died 10 years ago, and his son Roger is now the chief executive and has worked in the business all his adult life. Importantly, this is the key information. Dudley gave away in his will the equity in the company to 4 grandchildren, 10% each, and Roger 60%. And as I scan through the next bit of the page, we can see that the children of Roger, so the grandchildren of Dudley, who have 10% each, pursued their own careers and not interested in becoming part of the management team. So this suggests to me that they are open to selling their shares perhaps on a listing or to a merger with a rival company, that kind of thing. So again, we have that possibility of a listing. And as I've just seen it here, Grapple is an unlisted entity. So we link these two things together, suddenly a listing looks like a real opportunity. And if we remember, IPO has a number of pros and cons. First and foremost, the sort of recognition, the branding. You're moving into this big ocean of sharks, the big companies. You're no longer a small company because you've got a listing. You've got a bunch of finance that will come into the business by selling those shares, which can then fund something like an acquisition. There's a whole swathe, and we'll go through those in just a moment. Importantly, Roger is aged 55, so the current CEO, and is likely, or wants to rather, retire in the next 5 years. So again, listing is super important. So this is what we find in the F2 syllabus. The pros are a diverse equity base. So by this we mean that the company doesn't have to rely on a small number of shareholders to acquire additional funding. They can actually draw upon a wider amount of shareholders that all potentially would invest more equity capital into the business. On top of this, there is an increased recognition of the brand because they're entering the big leagues, as it were. They get cheaper capital because typically the way in which capital is worked out is a weighted average between debt and equity. You want a bit of both to balance it, because too much of one or the other will then increase the amount you pay for your capital. It is more of an F3 topic, so don't worry too much about that point if you don't quite get what I mean. You'll see that in F3 once you pass the MCS with this product, but importantly, just make a note, it is cheaper capital by undertaking a stock listing. On top of this, we can attract and retain good staff because, good staff want to work for the bigger companies that have the most opportunities, and a stock listing does help facilitate that. And speaking of facilitating it, we can talk about facilitating acquisitions. We've already got a little bit of a hint of a potential acquisition need or possibility, and this will mean that the company could acquire the finance to go and then acquire a rival company to make the company grow very, very large and, importantly, more profitable. They also get a greater finance, or at least a greater number of financing opportunities and options, because you have a variety of different instruments on the stock market. Again, you won't need to necessarily state those, just important to mention that there are more opportunities and options for financing for listed companies. There is some drawbacks, however. It's a costly process, so they'll need some money in the bank to adhere to all the regulations and the costs of legal fees, and maybe some outside accountants to help with the process. It takes a lot of time as well from existing staff, so it might detract from a new project time-wise because staff will have to work on the IPO. It makes a lot of information public due to regulations. So, for example, competitors may get a few hints about what the company's up to in the future by looking carefully at their released statements, because it requires more information than the standardized sort of reporting necessary in most jurisdictions. One of the drawbacks that doesn't really apply, in this case at least, given what we've seen about the grandchildren and Roger, the dilution of ownership is a big deal to some shareholders. They don't want to lose control of the business. However, Roger wants to retire. The grandchildren don't really fancy working as part of Grapple. So with this in mind, dilution is a thing. It's an important drawback, but in this case it's probably not too relevant. And finally, there is a risk of not acquiring finance. We haven't got a superb idea of how big the company is yet, but if they're not too big, there may be some issues with shareholders knowing about the company, knowing whether to invest, knowing all the information. And if there's any doubt there, or not very good marketing from the underwriters that you employ to help with the process, then there is a small chance, well, not a small chance, I mean just a potential chance that the required finance will not actually be met because there might not be enough interested investors in the company. So, that's a lot of pros and cons. Please refer back to the F2 study text if that's confusing at all. But that's the key points to an IPO. And from what we've just seen, an IPO could be a real big deal for this case. We'll have to see in future pages whether we get further hints. Importantly, we have a notion that there's an IFRS sort of adherence from Grapple. That's just the standardized aspect of the MCS telling you keep on top of your IFRS to ensure that all the sort of statements are compatible with the regulation. It's extensively covered in F2 and we should be aware of that. And just a final thing, it's not a huge deal, but they're prepared in the currency of Zedland, which might have some implications comparing them to foreign competitors. For example, if we were to benchmark as per the balanced scorecard style performance measurement in P2. So just a note there. And on to the final section of this particular video, we'll see the industry's background. Now, importantly, we've already looked at the industry in the industry pack. If you haven't watched that, maybe watch that first. But either way, the soft drink sector is a mature sector or mature section of the beverages market. Now, the key point here is mature. This implies that consolidation is super important. And what do I mean by that? Well, consolidation typically means you've got a market, you've got a product. You're simply looking to increase market share and entrench your position as a big company in that market. And one of the key ways in which you do that is by acquiring rivals and making your business bigger and growing in quite an inorganic fashion to ensure that you have that sort of market placement, that big role in the market, and ensure that profits continue. So again, to my mind, this hints at an acquisition, and an acquisition in turn hints that perhaps an IPO could be the method to fund it. Now, that's not a guarantee. I wouldn't necessarily treat it as gospel from me. However, this is the very strong feeling I'm getting already, and we're only a few pages in. So we'll make a note of that and keep that in our minds as we prepare for the exam. Again, we'll find this kind of thing in the F2 syllabus if we are revising this topic. And importantly, the page goes on to say that the industry was over 100 years old in Zedland, and there are two main manufacturers as well as smaller ones. So who are the main players? And that is not Grapple, it seems. Party Pops and Carnival. So these companies are, to my mind, just having a quick glance down here, they are your Coca-Cola and PepsiCo. Yeah. So when we consider how this industry is, we can see that Grapple is, third and a lot smaller than the two huge players in the market. So this means that typically we're going to be competing in quite a difficult set of conditions where we're constantly trying to carve a niche or carve our own market away from these big, huge companies that have a huge market share. And that has a number of difficulties, as I'm sure we're going to get hinted at in the next few lines. So, importantly, it says they are globally strong brands, that's Party Pops and Carnival, registered in Zedland and listed. So, the reason why I think this is important is not only that, listing on a stock exchange is really good for a company, increases the money coming into the business, enables them to do a lot of cool things such as acquire rivals, become bigger. But just by mentioning it and being quite specific about it, it does again imply that perhaps Grapple could list on the stock exchange themselves to try and grow into a larger market share to be competitive with these two big companies. For example, just to say perhaps Grapple wanted to buy Tiger Fizz, suddenly they would be 14% of the market share in Q2 2018. Now, 14% versus 9% is quite huge, and in fact it makes them more or less a third of the market share of Party Pops, compared to currently they are around a fifth. 45 versus 9, that's about 20% or a fifth of the market share that Party Pops has. If they were to acquire Tiger Fizz, suddenly they would have 14% versus 45, which is give or take about a third. So you'd increase your competitive rivalry, your ability to compete with these huge dominant companies by the looks of it. So again, I feel like a listing is on the way and an acquisition is also on the way. So again, we're not going to make a note of it here, but again, refer back to F2 and those two topics. It also mentions that the other firms, so Grapple and Tiger Fizz and other producers, are unlisted. So again, speaks to this idea that perhaps it would be quite easy for Grapple to acquire a rival that isn't Party Pops or Carnival, of course, because they're unlisted. They can be bought from maybe some families or just a few small amount of investors that invested early in a business, and it wouldn't be as big a task as trying to acquire a listed company with a variety of shareholders with a variety of different interests. And importantly, they do not share the same level of brand awareness. So again, branding is super important. And we know that's from the industry pack, but also it seems now that whilst Grapple are doing great things in CSR to be quite, brand centric, we're also going to need to push that with our ideas in terms of project management, so P2 again, and perhaps even some negotiation with the government versus regulations, ensuring that we appear as a brand to care, to be a really big brand. We're trying to grow that and foster that growth. So that's going to be at the back of our minds no matter what we do in terms of thinking about how we answer our questions. Now, super importantly, in order to compete, a number of smaller firms are consolidated through acquisition. So as I was saying, listing, acquisition, kind of chain reaction. But Tiger Fizz and Grapple remain in the ownership and management of their founders and their families. Now, I don't know about you, but I'm getting a whole lot of feelings about a Grapple Tiger Fizz kind of merge / acquisition. And with this in mind, we can definitely say that it might be a really good idea. Tiger Fizz adding 5% of market share to Grapple would be a very, very good thing. And as we can see here, Tiger Fizz have had some difficulties going down in market share on a year. So with that in mind, Grapple might be in a really good position to acquire Tiger Fizz. Importantly, on this kind of aspect, we will see that if they were to acquire Tiger Fizz, it would also potentially build a bigger brand, which we know is super important to compete with Party Pops and Carnival. So let's scroll down now to further information. We can see that market size remains significant. Okay, so they're basically saying it's still a positive NPV project to invest in the market. It's still a good market to gain profit from. Just a standardized sentence. So we know that the market's not necessarily in trouble right now, at least in Zedland. So we're getting a repetition from our industry pack. A strong brand cannot be overstated in the soft drinks market. We already know that from our research, and one of the main reasons why Party Pops and Carnival have been hugely successful is their brand legacies on important advertising campaigns. So this is quite an important part because there's not often a lot about advertising in a pre-scene. It's quite an overlooked topic. It's a very difficult topic to also place on the syllabus, but it would probably fit into project management and sort of allocating resources or money rather to advertising, having these big ad campaigns. And in the case of Party Pops and Carnival, they promote emotional and lifestyle attachments to their product ranges rather. So with this in mind, perhaps they could merge with Tiger Fizz and use that big sort of merging of two brands to then have a big ad campaign promoting this new merged or acquired big conglomerate. And this would then maybe have a celebrity doing a comical or a sort of very sort of personalized advert. There's a lot of Pepsi adverts that have a number of football stars across the world. There's a famous advert with sumos versus World Cup players in 2002 in regards to football. And it sort of just, gives this very sort of big brand awareness because of these big partnerships with different tournaments and different sort of influential categories of people. So maybe a celebrity actor, footballer, blah, 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 could actually be utilized by this new Tiger Fizz Grapple company. And also, big data is used for all aspects of those businesses. Now, let's assume that, take it for granted, Grapple acquire Tiger Fizz, become bigger, they will need to utilize big data. Now, the important part about big data is the 3 V's. That's volume, velocity, and veracity. So with this in mind, we're going to need to have some big data servers, maybe acquire a larger database. We're going to need to have far more software that's analyzing different parts of processes or the results of marketing. And we're also going to need to process them at a rather fast speed, at a very large volume. So that's a resource management style aspect from P2 regarding big data and how we manage our information systems. Now we get a bit of information about the strategic aspects of these big companies. They sell high volumes as they are cost leaders. Now this is a business strategy, or if we think about Ansoff's matrix and how you place your new product, they're looking for this sort of cost leadership where they've got an existing market, they've got their cash cow, and they're simply seeking to sell high volumes at a low profit margin and ensuring those sales are maintained highly. Their margins are some of the lowest in the industry, and this is largely due to additional spending on advertising and packaging innovation. So whilst they're building this big brand, it does in turn mean they're spending a lot of money reducing their margins overall. So whilst they're these huge companies, they might actually be less interesting to an investor on the whole because margins are so small. By comparison, it seems Grapple are more concerned with quality and product differentiation as their strategic focus. And if Grapple were to have a big conglomeration with Tiger Fizz by acquisition, for example, they would be very attractive as a listing because investors want high returns. Now, if they're looking for quality and productive differentiation as their strategic focus, they are likely going to have greater margins, which means more profit, which means happy investors, and that ultimately means more investment. So, it seems like a very key opportunity. If we think about our SWOT, we can place this in opportunity for Grapple to use an IPO to acquire Tiger Fizz, amplify that quality and product differentiation strategy, and then turn that into happy investors that keep on pushing money into the business for further and further growth. Importantly, however, they do not distribute globally, and so they keep costs down, and enables them to raise their margins because they're not actually exporting. So tariffs, for example, and that could come into negotiation with different governments, for example. That's a bit of E2 we could throw in there as well. Importantly, if they don't distribute globally, they may want to start, essentially, and this would mean that they would need to think about logistics and think about how they get their product to market in different foreign markets, and this could be a key new project for you as the examining student, as this finance manager role. So it's important to keep in mind that you may be asked to recommend different methods of going about, breaching these foreign markets and selling Grapple products there. Importantly, most companies have identified the need to move away from non-recyclable packaging, as Grapple have already done. We've seen this, and it's following the lead of Party Pops and Carnival by the sounds of it. Again, that's kind of to do with branding. They're seen as these big companies and the whole industry moves with them. And that's kind of where Grapple wants to be. They're already doing recyclable glass bottles for quite some time now. So there is definitely scope there to be one of these leaders. It's not quite a big point, but it's worth noting. There's a lot of opportunity here. So SWOT. SWOT, SWOT, SWOT. So as we move down here, apologies for the little skip there, we have the challenges of the industry. So again, we've got this health lobbyist with the sugar taxes. We have already covered this, but again, it brings about the question, who absorbs the cost if there's a new tax on sugar? And obviously Grapple will have to adhere to that. Who takes the cost? Do you negotiate a deal with suppliers? Do you pass on the cost to the consumer? Do you absorb all the cost yourself, which could be quite tricky in regards to keeping those margins high that we've just been talking about? Loads of considerations here, so I won't bore you to death with further and further talk about this. However, we need to keep it in mind. There's a key aspect here that could be potentially very problematic for Grapple. Again, this falls under E2 negotiation if we're talking about negotiating a deal with our suppliers and retailers, but also our project management skills. Can we afford to absorb the cost? That kind of thing. Importantly, however, it does say this has not made a huge impact on the market, but has prompted most manufacturers to produce new ranges of sugar-free drinks. Sugar-free energy drinks, rather. That's very specific. We didn't hear that Grapple have an energy drink, let alone a sugar-free version. So with that in mind, new project, new product. That's a potential P2 question. Perhaps some further analysis could be done with the financials in future. Perhaps some further analysis could be done with financials in the future or with some additional unseen material. But for now, that's a P2 project management consideration regarding a new product. Notably, Party Pops and Carnival have experimented with innovative styles of packaging and special editions that follow the trends and interest in celebrities on screen and in the media. A variety of different things, such as bottle tops that maintain the fizziness, have been developed. So basically they're saying Party Pops and Carnival lead the way. They're investing large sums in R&D, and they have iconic styles that increase the awareness and status of their brands, which increases their dominance. So there's two things I want to point out here. We know that Grapple also is in a situation where the existing shareholders don't really want to continue with the business. They're happy to have the shares, but one wants to retire. The grandchildren want to not be a part of the company. Essentially, they've got their own careers, so they themselves could be sold or be acquired by Party Pops or Carnival. Just throwing the idea out there. I actually haven't seen an MCS question that covers that yet. However, it's not out of the realm of possibility. So it could be the pros and cons of accepting investment or acquisition by Party Pops or Carnival and seeing where that would leave the business as a whole. So we now go on to a sort of bullet point list of what's important. Green credentials. Grapple have that. They may need to improve that. We haven't got a whole lot of information. We know they've got some recyclable glass bottles rather, but whether that extends to all products and whether that extends to any plastic packaging they have, we do not know. But they should be looking into this if they haven't already, and this again would be a new project to ensure that their operations and products are green friendly. And the preservation of quality of the product. Now we know Grapple strive to have this. Hopefully, we don't know yet, but hopefully there's a whole lot of quality control going on in their production process. Otherwise, they could be in a bit of difficulty in terms of driving further success. Now, what are the opportunities? This is SWOT. They're giving us free ones. This is them just, the examiner is just handing us it on the plate at the moment. So brand extension and product development. Grapple could produce a sugar-free energy drink, as we've seen above. They could produce a water brand, as we saw in the industry pack. There is a whole lot of possibilities to create volume growth and present differentiators in the industry. And we know that Grapple's core strategic focus is on quality and differentiation. So again, new products, water/energy drinks, that could be Grapple's next new cash cow. As we move down here, we can see that packaging is super important in the sort of interesting ways and sustainable ways to attract a wider range of customers. So we don't know much about the packaging apart from the use of recyclable glass for the past 20 years. However, they could perhaps give us a project or sort of pros and cons in terms of numbers. Perhaps the costs go up or down, or supplier issues. Loads of P2 and E2 topics could come in here regarding, developing a new way to package their products and increase brand awareness whilst keeping it sustainable and fairly innovative. And again, we've spoken about this already, consolidation of competition. The industry has high barriers to entry. So with this in mind, we're not going to suddenly get a new company pop out of nowhere with a new fizzy drink and, blast us out of the market. That's not going to happen. However, it's a good idea to band together if you're in the smaller category, and Grapple and their rival Tiger Fizz definitely are. So again, links to this IPO that we've been talking about that might facilitate an acquisition by Grapple for Tiger Fizz, which would then help them compete in the market, which is unlikely to get many new competitors apart from simply competing with these huge Pepsi/Coca-Cola style companies, Party Pops and Carnival. So again, we've covered these broad topics above, so I won't make another note of them again without boring you to death and lots of stuff to read, but super important before we leave you here on the first video, I must say, please get that F2 equity finance stuff on point. It's certainly going to be, a factor here. Certainly going to be a factor here. We've got loads of hints about a listing, loads of hints about acquiring Tiger Fizz potentially, and also the need to consolidate, the need to extend the brand, the need to have more products. Acquiring a rival is a great way of doing so. So if you want to take away anything from this first video, is that we are a finance manager, we're going to dabble in all areas, and importantly, we're going to focus on more so the non-statement style stuff in the F2 syllabus, and the P2, E2 is going to come into it in regards to legislation, negotiation, thinking about how we manage projects, and those projects are probably going to center on, in a broad sense, an IPO that helps facilitate an acquisition, because that's what drives success in this market. So thank you very much for listening. I hope it's been really helpful so far, and I'll see you in video 2 where we go over the next 4 pages of the document. Thank you very much, and I will see you in just a moment, I suspect, or whenever you pick up this series again. So, see you next time.
Hello, it's me again. I just wanted to take a few minutes of your time to first extend my hope that you enjoyed the free sample that you've just viewed, but also to just sort of explain what else Astranti do to help you pass your exam really effectively, provided you found our sample particularly interesting and insightful, of course. So, of course, we have a study text for every module, ranging from P1 to F3, and the certificate level is also free on our website. So we have study texts throughout the CIMA course, every module you could hope to study. The certificate level are free, as I mentioned, and then the rest of them, ranging from P1 to F3, are all available to purchase. Alongside this, if you're not so much a study text kind of student and you prefer a visual way of learning, we have the course videos. We essentially break down the study text into bite-sized presentations with a walkthrough, and it's a very, very, very engaging way of explaining the course. Following this, we have the pre-scene analysis, where we break down each pre-scene sitting into a number of videos, going through the whole document, but also adding a top 10 recommendations for what will come up in the exam, and also a strategic analysis where we put all the models you'd find in E2, for example, to the pre-scene itself, whichever that may be at the time. Alongside this, we provide an industry analysis. This is a document and accompanying video which help you give that contextual information in your exam. So, for example, if the pre-scene's on the oil industry, the industry analysis will break down the oil industry, the current topics, trends, issues, what the competitive market looks like, all those kind of aspects, all condensed into one so you can spend your time wisely in your study period. Following on from this, when you actually want to practice all this knowledge, we have mock exams for all of our materials. So StudyText has a generic mock exam based on the module, whereas the pre-scene analysis has mocks available to purchase that are based on that specific pre-scene, that are targeted to the key issues we believe will come up. And if you're not content with just doing those mock exams and practicing that way, we have a marking and feedback system where you can purchase the ability to send in your paper, have it marked by a CIMA qualified accountant, and get personalised feedback on whether you can improve X or Y area. And sort of finally, if you will, if you're feeling really underprepared and that exam is coming really, really soon, the masterclasses are offered by Astranti, and they're essentially a crash course in anything you could want for that topic. So if it's a masterclass on the pre-scene, it's going to give you absolutely everything that you could possibly need to know about the pre-scene in one rather really condensed sitting. Likewise, if it was the F3 masterclass, you would have all of F3 gone through in a very crash course style presentation and video link. You can also purchase it post-stream as opposed to viewing it live, all these kind of aspects. We are very, very confident that these materials will help you get the exam success that you want. So we have a pass guarantee. Provided you fill out a form which demonstrates that you have utilised our materials to a large extent and actually taken the time to study them, and you have unfortunately failed, we will offer you the same materials again for the next sitting as a consolidatory offer to ensure that you can get back on the horse and get that exam grade that you want. With that said, thank you very much for watching the sample video. I hope you enjoyed it and it gives you a lot of confidence in Astranti and your CIMA future.